Hello. For those of you that don't know me, my name is Bill Shamp. I'm the inventor, creator, developer of the PRICEPhysics GUI. GUI stands for Graphic User Interface. Basically, it's a software tool for trading that gives you the ability to see market price direction and strength on the fly at any given moment. I'll go through and explain the components on the chart. If you've already gone through the website and seen some of the videos, I'll make this pretty quick and short and to the point, just giving you the basic components, and then move to go through the trades as they've executed over the last week. What you're seeing on the screen here is Monday, February 27th. But first, let's go through and give you all the components. First off, PRICEPhysics is based on constant volume bars, which means that every single bar is the exact same amount of contracts traded. The size of the bar, the range of the bar is based off of the price as they moved up and down inside those specific number of contracts traded. In this case, this chart is a 5,778 volume bar chart. That means that every bar constitutes the range of 5,778 contracts traded. Now, that's a random number. Number that, on these charts, you can create a chart as fast or as slow as you want. You can create a 333 volume bar chart. You can create a 8,000 volume bar chart. You are in complete control of the speed of the chart. So you can do anything that you want. So anyway, this is a 5778. The blue bars are simply where price has closed higher than it opened. The green bars are where price has closed lower than it's opened. The background colors, green and white, I'll explain how they're created, but the green is when price momentum is down and white price momentum is up. So all of the information and the labels on the bars, the ends are new highs or new lows. The Fs are failed highs or failed lows. And again, I'll go through those in a minute. And the Ps are price failures. That's just simply where price is pulled back on its move to go higher or lower. And it's just that pullback. If you've been trading for a while or whatever, people call, it's a pullback. Well, we've designated as a price failure because it is a consistent tool that we use on our charts. It's a component of the charts. It's something that is a building block of all of our charts. So as you can see, all this information on the chart, there is no indicators. You see labels, you see background color changes, you see bars themselves are different colors, but there is no indicator per se on this chart. There is not something that's designated on the chart as a moving average or a Bollinger Band or Fibonacci's or any other kind of what I call voodoo science. Now, I'll get nasty grams for that. All that I do and everything that I'm going to show you is based on pure price movement. Indicators, anything that you apply to a chart, needs to be calculated, needs to be interpreted so that you can see that indicator's benefit as it's applied to the chart. It would be the same thing as if you're a golfer and, when you're out on the golf course, you need to have somebody standing beside you as you're playing golf, to explain to you the game every time you hit the ball, explain to you every aspect of what's going on. You don't need to do that. Once you play the game a few times, it's pretty elementary. Once you learn to read a pure price chart, everything is elementary. Everything that I show you is so silly, smooth, that you just kind of have to look at it at times and just shake your head. There's young kids that are out there promoting master classes and teaching you how to trade. That's wonderful. God love them. The only problem is they don't have a clue. They are promoting the use of indicators that those of us that have been in the industry for decades know are worthless, but you don't. So they hype and promote. And, you know, I called one person the other day, told him he was a carnival barker. I mean, it's just silly because none of these individuals think you have the common sense that for anything. So what I do is I teach you a systematic way, step by step, of being able to learn to read those charts. So we have our labels, new highs, new lows, failed highs, failed lows, and price failures. A price failure, again, is just simply, price pulling back and giving you a place or a pivot to move higher, or in the case of when price goes lower, to go lower. A F, or a failure, is where price will break through a previous price failure, but doesn't have the energy to create a new high or a new low at that particular move in the market. So we see how all of those components work together to show you how price flows. If you're going to take trades, how do you use the GUI? Well, if the background color is white, momentum's up. So you're going to find buying opportunities in here. You're going to find selling opportunities here. So, buy, worthless short, buy, sell, buy, sell. Those are the areas that you're looking. Think about it as another way. Grab the fishing pole and you're going to go, I'm going fishing. You don't go in the middle of the church parking lot to fish. There's no fish there. So when you're looking here, it's like I'm looking for buy trades when the background color is white, and I'm looking for sell trades when the background color is green. Well, just any buy or sell trades? No. You want the most efficient, the best setup, the best confirmed trades, because that's all you need. If I can naturally, or if I can read a natural price chart, I just want to see when the price is telling me I have the best opportunities to buy or sell. So again, I will walk through each one of these trades step by step. Now, I also want you to tabulate these trades, not only just today, this first day out to Monday. Mondays are usually yucky, but also every day of the week. So the arrow here, as you can see down there at the bottom, is at 8:33 in the morning. This is the S&P. This is the micro S&P. I'm showing this. The S&P is no different. A lot of the guys like to trade the micro S&P because like this chart will easily handle 20, 30, 40 contracts. And all you're looking for is being able to, enter and exit these trades as efficiently as possible. So we start looking at the market right here as soon as 8:30 hits. 8:30 hits, we're ready to go because we know that there's going to usually be some news at 8:30, whatever. Well, we see the market going up, white background, market going up. I'm looking for a reason to get into the trade. Now, these two bars right here are creating a price failure. What do you mean? What do I mean by a price failure? It's where price pulls back in that price move and creates a sore thumb where the bar to the left is higher. This is a price failure of support. And this is the confirmation bar. If this bar closes higher, if the low of the bar is higher than the low of this bar, then that bar itself sticks down or looks like a sore thumb. So the process of a price failure is a 3, or in this case where you have 2 match bars, a 4-bar confirmation to create that as a price failure. So that price failure label isn't marked until this bar closes, because we don't know that's a price failure until that bar closes. Immediately when that bar closes, we have a price failure, white background, price moving up. We have a price failure of support where the confirmation bar is blue, meaning price is going up, and our target is a new high. Those are all the conditions ripe for a good buy. We get into that trade and immediately reversed, and we got stopped out. Our stops are placed right one tick below the price failure. So our first trade of the day, we get stopped out. So price continues to move on. As long as the background color is white, we're looking for buying opportunities. Here's a failure, maybe another buying opportunity set up. When that bar closes, it's green. It has to be blue for a buying opportunity, so no trade. And then price breaks through here. As soon as price breaks through that failure, moving from white, as soon as it breaks through that failure, the background color changes to green. Green now telling us that the market momentum is down. Now, I'm going to show you the next trade, but I also want to explain that the more you learn to read these charts, the more that you're going to self-filter some of the trades that the chart is giving you. What's that mean? If you play a sport, let's say tennis, the first time you grab a tennis racket, you get out on the tennis court and you start hitting the balls with somebody. Are you the next day ready to turn pro? No. The more that you play tennis, the more you play any sport, the better you get at it. The more that you fine tune and hone those skills. And the same thing with reading a chart. And the reason that you can get better each and every time you're reading these charts is because they don't change. Everybody else's charts change. Every time chart out there is just a chaotic mess. Range bars, Fibonacci, Renko, volume profile, attack to time charts. It's all a complete and utter mess. It's chaos at its worst. But that's fine. This is consistency at its finest. Pure logic. If this, then this. Now, so pulls back here. We now have a failure of resistance. Now, failure of resistance, the confirmation bar at that point is a green bar. Background color is green, momentum's down. We have a failure. We have confirmation bar confirming that failure. Now, not only that, we've broken through and we're creating a new low. Nice shorting opportunity under normal circumstances, with the exception being that previously, if you're going to track resistance from white area to white area, resistance is making new highs, and support, green area to green area, or in this case, we'll go back a little further, green area to green area, support is making higher lows. So by the sheer definition, and I'm one of the few people that do specifically define trend, if you take three sequential points of the background colors, either resistance or support, those 3 points will define a trend. New high, higher low, new high. Or in the case of moving into this position, new high, higher low, move this over so you can see it better. Here to here, new high, higher low. And we'll continue that move on because this is your day, this is your day line. New high, price is pulling back here. And at this point, you know, when you're making decisions, when this is turned down, new high, higher low. So you're fighting the trend by shorting at this point, but it's a viable trade. It's a rules-based trade. So at that point, you take your short, you instantaneously, you get a blue bar, it turns on you, it goes up, and you get stopped out. Now, I marked being stopped out. Most of you, once you learn to read a chart, you'll never take that trade. Some of you that take that trade will go, as soon as I get that first blue bar, I'm out of the trade. That too. I make a joke and I say, I teach you how to read a chart. I teach you how to use this tool to the best of your ability. At some point, you're going to be better at applying this tool in your own environment than I can show you. You truly will surpass me and my skills at being able to apply common sense to these charts and taking profit at will. So let's move on. So the first two trades out of the gate, hey, we're down 10.25 points. We're not happy. So price moves up. Background's white. I'm looking for a price failure. I'm looking for a failure. I'm looking for some reason to get into a trade. Then we get a price failure. And then it comes up and it confirms. Now, I want you to understand that these trades don't happen instantaneously. This bar started setting up at 10 o'clock. And then the price failure was almost 3 minutes later. The confirmation bar was another minute after that. So you had 4 minutes in here while this process played out. And the background color was already white all the way back here. So you're preparing, you're already set up, you're looking for a buying opportunity in the market so that when it plays out, there's your entry. First bar off, your profit, green bar, no big deal. I'm in profit, pulls back, gives me another pullback. Remember, my entry is here. You're still about break even at this point. Next bar out makes a new high. Wonderful. So you can move your stop up to this bar. You can move the stop up to the white bar here. In the rules-based trading, if you get two green bars against your trade at this speed, you exit the trade. So I showed the exit here. But if you're manually taking that trade and you're in the trade here, the pullback here doesn't bother you. You're still looking at momentum going up. But if you're putting your stops bar by bar or loose, and you get that first green bar and it stops as soon as it takes out that low of that green bar, I'd take your profit at that point. And there's still probably 50, or excuse me, where was this? 20 to another point. There was another point in that trade. So you're out of that trade. You're up 3.25 on that trade. Background color is white. You're still looking for another reason to enter the trade. Now, price failure bar confirms here. The problem is that, and this is me, when a trade exits and that same bar that I exited on is part of the process to execute another trade that quick, I stay away from it. And the reason I stay away from it is that it's not what I would consider a clean entry, because I've already used that bar. That bar is used up and gone. I've used it as an exit. Even if it was the first tick of the bar, I'm done with it. So, and as we can see, we bumped heads with a failure, came down and gave us, a price failure, came down and gave us another failed oscillation back up. What this is called right here, when you get these sequential failure or price failure, failure, price failure, is consolidation. And with price physics, being able to see those areas of consolidation is really quick. So here, rolls over. We go through this. The price breaks down through the failure here. So on this bar, the color changes green. Okay, great. Momentum's now changed. Great. So, now that momentum's changing, I'm going to look for selling opportunities. Out of the gate comes up, there's a price failure. Now, again, this started at 32 minutes after 10. The price failure formed and completed 2 minutes later. The confirmation bar, 2 more minutes. You're looking at 6 minutes. 4 minutes, 4 or 5 minutes between the time that sequence started and the confirmation bar closed. So that whole time you're preparing, you've got your finger on the sell button, so that once that bar closes and that bar opens, there's your selling opportunity. Now, again, you're short. So now becomes managing the trade. Next bar out's a blue bar. I'm not worried about it. Price is going to fluctuate up and down. I just keep my stops tight. Moves down again, moves down again. My only concern is seeing two blue bars in a row. One blue bar, no problem, comes up here, makes another price failure. Now I can move my stop to the top of that price failure. Price moves down again. Another green bar drops again. Now we have, a blue confirmation bar here. We have a blue confirmation bar. We have our price failure, our stops up here. As soon as that bar closes, my stop is now here. Well, blue confirmation bar, it's on a new low. You're going to manage your own trades. All you do is keep an eye on those trades. If you're managing that, as soon as that blue bar closes, you might want to get out of the trade. If you want to allow that trade to breathe a little bit more, you're going to hang on to it and it gets stopped out as soon as it breaks through that price failure right there. Still 9 3/4 point trade. Nothing to sneeze at. Now, price drops some more. Now, here we get a failure. And again, I'm going to show you this, and then I'm going to take this off. I marked it, and then I marked it so to show you an outcome. We exited this bar. We exited this bar because it was stopped out as a short trade. Now, are we going to use that same bar that we exited on to use it to enter the next trade? Now, we already did this once before. I prefer not. If you want to, that's fine. You just have to be able to manage the trade tighter, and I'll show you. At this point, there's our failure bar. There's our confirmation bar green. Well, what's it tell us? Background color is green. There's my failure. There, it's confirmed that failure. My target is a new low. So on the close of that bar, the execution there's my reason to short the trade. Well, what happens? Enter that trade, the bar closes blue, but not only closes blue, but it gives us a price failure of support. Now, if I'm selling the market, I don't want my target oscillation to be a failure. I want it to be a success. And I want my target oscillation to make a new low, not a failed low. So when that makes the failed low, I exit out of that trade. Now, would I have normally taken that trade in the first place? No, because I don't want to use that bar as a part of the process to enter that trade short. Excuse me. So I've marked it anyway, taken the loss, but I'm just showing you that under normal circumstances, you more than likely wouldn't have taken that trade. Now, let's move forward. Now, 2 bar again, that ends up becoming the price failure, that process. As soon as that bar closes, what do we have? Well, as soon as that bar closes, it's confirmed that as a price failure. We have confirmed that we're down there trading toward that new low. So the entry of the trade, excuse me, that moved, would be the open of that bar right there. Now again, when that bar closes, I've opened that bar. The bar closes blue. Not what I want, but again, you're managing the trades. If I'm going to take this trade, well, if I get 2 blue bars in a row, there's my entry, there's my second bar, and again, it moved. Okay, then the exit, as soon as that second bar closes blue, I'm out of that trade. Now, you're looking at that bar and you go, well, I entered that bar. Oh, okay, great. And then it closes, and it closes blue. Oh, that's not the direction I want price to go, so you can get out of the trade. Again, you're making decisions based on your account. You're making decisions on your ability to read a chart. You're not making decisions on somebody telling you that he's a master at teaching you and you need to follow what he's telling you. No. You need to read the damn chart, and you need to do what the chart's telling you to do. For those of you that are driving cars, for any of you that need to have a co-driver in your car while you're driving the car, you need to go find those master classes that those people are teaching and go have them teach you how to trade. Because that's what they do. I teach you how to read a chart and trade. You can do it all on your own. It's not hard. In fact, I'll say it, it's just stupidly simple. People make this way more complicated than it needs to be. My GUI just gives you the ability to see it clearly. Now, back after that commercial break. So we move on. We've now taken, those two trades. You've managed them on their own. And like I said, I'm marking these based on the rules of taking these trades. So price turns back down again. As soon as we break through that new low, it's down again. Great, wonderful. Now, I'm looking for selling opportunities because the background color is green. So first out, there's a bar. Maybe it's a price failure. Well, once the confirmation bar, it is. I have a price failure of resistance. My confirmation bar is green, and I'm going to jump on that trade, but I want to break through that low, and it does. And it does it again. Price pulls up a little bit. I'm not worried about this. Okay, my stop's up here. I can adjust my stops anywhere I want. If you adjusted your stop here and you're out here someplace, you're still profitable. I like to keep my stops off price failures. So it drops again, drops again, drops again, and I get a blue bar. Not too worried about it since the last new low is a green bar, but I'll keep an eye on it. We get 2 blue bars in a row, and there's my exit. That's simple. If this, then this. 2 blue bars, I exit. So out of that trade. Now, price moves up here. I'm looking for another shorting opportunity. Well, we get 3 tops here in a row. We get a confirmation bar, and you go, okay, there's my price failure. My confirmation bar is green. Background color is green. Everything's going down. There's my target. Wonderful. I'm short. Well, it drops, comes down here, oscillates a little bit. We get a red bar. Red bar, no bueno. Red bar is transformation. The market is thinking about doing something different than what it's already doing. We have quite purely a lot of contracts being traded at a specific price. And a red bar just simply says the open of the bar and the close of the bar were exactly the same. So from experience, I just say, to heck with it. I just exit my position. It's just a lot easier. I get out. As soon as I see the red bar, I'm out of that trade. And this is why it's important that, you watch these trades play out bar by bar once you're in them. I mean, it's 5,778 contracts per bar. I mean, it's not like they happen instantaneously. So you're out of that trade. You got half a point. So it continues to drop. There's a price failure. Excuse me. You get another price failure. There's your confirmation bar. The difference is now your target is a failure. We don't like failures. We don't want to trade toward failure. We don't want to trade toward price failures in some instances, but not failures. The market as a failure has already said, well, it's broken through a failure, but it hasn't made a new low. Your best target for price is when the market is making a new high or a new low. Short toward a new low, go long toward a new high. Why? The market's already told you that it has a propensity to go that direction. Allow it to play out. So we don't take that trade there. Price moves up here, starts breaking out. Then we get the failure here. We get a 2-bar failure up here. Then we get a confirmation bar. Well, we have a failure and it's confirming. And now it's trading back toward a new low. Okay, well, now at this point, again, you trade yourself. I look at this and go, that's a rules-based trade. That is a short, period. You look at this and people with experience and you go, yeah, it's right. But if price reverses and takes out that failure, you're going to get a color change back up at this point. And it's, 12.50. Now, Before I go through this trade at this point, I'm going to tell you that you have a choice. Nobody wants to sit in front of the screen every day, all day long. Here is the market between 8:30 in the morning and, well, noon. Okay. So you had 375, 1350, 1675, and 11, 15, 17. You, for the whole day here, you might have lost $5 a contract on the micro S&P, maybe. And this is a Monday. If you manage the trades better than what I've shown you on the chart, just based on common sense, you made money today. Okay, and that's up till noon. And that's working 8:30 to noon. 3.5 hours a day. Now, didn't make much today. Today's Monday. You could have made a little, but the rest of the week will show you an understanding. Now, the rest of the day, because I won't bore you through this, I mean, we go through and you can see the charts. The video is going to be on here. You can see, and I'll go through each one of these days so that you can see that each trade setup is identical. Background color is green. There's my failure. There's my confirmation bar. There's my entry. 2 blue bars. There's my exit. 2.25 point loss. Background color turns white. Now I'm looking for buys. There's my price failure. There's my confirmation bar. There's my entry. And again, hits consolidation, 2 green bars, and I'm out. I've lost 5 points on that trade. Now, continues on. There's my failure. There's my confirmation bar. There's my entry. Okay, now this is a little more aggressive because now you're not trading back toward a new high. You're trading back toward that failure. Now, the expectation here is that you'll break through the failure and you go up and take the new high out. That's an expectation. Now you're guessing. If you're going to guess, that's fine because you can read a chart. If you're going to get into that trade, you're going to manage it bar by bar. If I'm in that trade, my stop is here. As soon as that trade closes here, I can move my stop here. As soon as that bar closes, I move it here. As soon as that bar closes, I move it here. As soon as that bar closes, I move it there. And as soon as it hesitates at all here, the low there is 2.25 or 3.25, and the lows there, those are matching lows so that here you're out of the trade here. Now, with 3, 4, that's a 7.75 point trade exiting out here versus here. But again, I'm going to always give you the rules-based entries and exits. Your ability to manage those trades better are up to you. I'm not the sharpest knife in the drawer. You should be able to outtrade me in a couple weeks. Outtrade me based on the rules trades. Now, 2 green bars, there's my exit, and still made 3.75 points. Now, the rest of the day, nothing, and I'll show you. Up, I'm looking for buys. As soon as it turns green, I'm looking for sells. Price failure, confirmation bar, wrong color. Price failure, confirmation bar, wrong color. Price failure, confirmation bar, wrong color. Price failure, confirmation bar, correct color, but it's 3:45 at this point. Now you start getting 3:30 on. I don't like to trade unless it's moving in, or it's playing with the rest of the day. So we're going to call this the day at this point. There's all the trades. At this point, for the entire day, you ended up losing 4 points per contract. In the micro, that amounts to $20. If you quit at noon, you're down about 1 or about $5. All right, so that's Monday. Now we're going to go on to Tuesday. Now, I'm going to set this up here. This is the video. I'm going to leave this up here, and this is the entire day. There's 8:30. This is end of day. Excuse me. we had, at this point, there was my short. Their price failure toward a price failure. Now, at that point, if you want to take that trade, you have a price failure toward a price failure. Now, you can clearly see that price is pulling back. But what's the problem? Momentum's not in your direction. You look at those trades, and a lot of times that you'll get overconfident. You go, well, I know momentum's in the wrong direction. And you look at here and you go, I can see where everything's kind of upside down and consolidating. But I'm going to take that short anyway. The one thing I want to tell you, everybody, don't make bad habits. My dad was a baseball player, and he said that, you know, if you can consistently get up to the plate and get on base every single time, he goes, it doesn't matter. He said, it doesn't matter whether it's a single, a double, a triple, home run. It doesn't matter whether you were walked. It doesn't matter whether the ball hits you. He said, your job is to get on base. He said, if you can get on base every time, he said, if that was the goal of every baseball player, that team would never lose. He said, but that's not the case. Your job trading is to make great decisions based on the information provided you. And you can do that. Background color is white. So I'm looking for a buying opportunity. There's my failure. There's my confirmation bar. There's my entry. Now, at that point, I have a red bar. Now, I'm going to choose to stay in the trade because that bar closed at the top of the bar. I'm going to get in the next bar. I mean, I'm already in the trade, but when that bar, if it doesn't take out that red bar, I'll exit my position. I'll adjust my stop to the bottom of that red bar. Price continues to move forward. I get 2 green bars. There's the exit of my trade. I'm up 6 3/4 points. Price pulls back again. Now, there's my price failure, wrong confirmation. There's my price failure, correct confirmation, but I'm trading back toward a failure. Now, aggressive trade, because it's trading failure toward a failure. I need to take out that failure there. This is really, really, really aggressive. Do you need to be aggressive? No, but I'm explaining the trade to you. So once you're in that trade, right here, as soon as that confirmation bar, I got to take out that failure, and it does. Price pulls back again. Well, that's okay. There's my stops down here. And, you know, on the next move up, I've got to take this out, and I really want to take that failure out. Well, it goes up and matches it, then it takes it out. Now I'm sweating bullets. I'm going, yeah, it's going my direction, but it's, you know, making it painful each and every run. There's a new high. There's a new high. Now I get a green bar, 2 in a row, and I'm out. All of that pain for about 10:01 to, you know, for almost 10 minutes for a 1 3/4. Again, you didn't know that going into the trade. You might have got out up here with more money. But this is, you know, it's all about condition and response. If this, then this. If I'm going to take the trade, momentum's up, there's my price failure, there's my confirmation. You have to follow it through bar by bar. Excuse me, price pulls back now, changes color. There's no more reason to enter a long trade down here. There was my failure. There was my confirmation bar at this point. But now we're taking out support. The expectation is that, you know, at this point, price is just going to chop around and change. And it does. It comes up, creates a failure. There's my confirmation bar. And I marked the wrong one. Which of the words? So that's actually a winning trade. There was your short. There's your failure. There's your confirmation bar. As soon as that bar closes, there's your entry. 2 blue bars. There's my exit. It's a 1 1/4. So I'll adjust the total here by now. Price drops. Comes up, looking for the next one. There's my price failure. As soon as the label occurs there, as soon as I get confirmation. On the confirmation bar here, I've taken out the price failure here. I still have one here, and I have my new low. So at this point, my entry is here. I need to take out support. I need that bar to break through, and it does. The next bar out here, I need it to break through these supports. Again, it's condition and response. If I'm short, I want to be making new lows. So it does. It makes a new low. Great. Now we come up. My price, stop is up here. I get a blue bar. I'm going to keep an eye on it. It closes lower, makes a new low. I get a blue bar now as a new low. At this point, some of you are going, well, I'm done. But 2 blue bars in a row, and there's your exit, another 3 3/4 points. Now, looking for another sell. It doesn't manifest. Color change, momentum's turned back up. There's my price failure. There's my confirmation bar. There's my entry. Now, there's my entry. Wonderful. Now, everything is fine. I need to be taking out this new support and then further support. Well, what happens? I'm into this trade, green bar, get another price failure here. It goes up. Great. I'm making money. I get another, pullback here. I get 2 green bars. Now, the second green bar is higher. I don't care. As soon as that green bar closes, I'm out of the trade, and I'm basically flat. I mean, it hit this pocket of starting in consolidation. It protected me, and I got out of my trade. Price pulls back. There's no buy here. I have a failure here and a confirmation bar here telling me price is going back up, but I have a price failure as a target, and at this point, momentum is nowhere to be found, and it's almost noon. So travels over past noon. So let's look at where noon would have put us, and this is Tuesday. There is 8.5, 8 3/4, 9 3/4, 10.5, 13.5, and a break-even trade. So call it 13 points in the morning. Now we'll go on in the afternoon, and that's only trading 8:30 to noon. The afternoon, price pulls back. We get a momentum change. We're looking for a shorting opportunity. There's my price failure. There's my confirmation bar. But at this point, we can clearly see that price is going up, and we see the bars are making higher lows and higher highs. So I'm going to keep an eye as soon as that bar closes. If you'd have taken the trade, you'd have been out at 88, and it would have been a 1-point loss or less. So we're not going to, I didn't mark the trade because at least for me, it's obvious that price is continuing to move up at that point. If we had failed to take out this price failure, you could enter it into the trade. Now, price continues to go up, breaks out that new high, now a color change. So on the color change, I'm going to look for a reason to take the trade. There's my price failure. Okay, I get that price failure when the confirmation bar. So I have momentum up, background color is white. I have my price failure bar. I have my confirmation bar blue, meaning price is going up. I have a target as a new high. Every reason to enter that trade. I get into that trade, immediately drops and stops me out by taking out the price failure. Out of that trade, 2 3/4 points. Okay, great. Next, price pulls back, gives me a failure this time. Wonderful. Then it gives me a confirmation bar. Okay, now at this point, this is a failure back toward this price failure, but I've already created a new high. White to white, I've already created a new high. We're trending up at this point. So I'm going to take this trade. I'm going to watch it really close as soon as I enter it, because now I have to take out that price failure and I want to take out that new high. I get into the trade, it immediately does both. Next bar, if you're managing it bar by bar and you get that green bar, you're out here. With me, I continue on, I get a red bar, there's my exit, 7.5 points. I'm out of that trade. I'm looking for another buying opportunity. Background color is white. There's my failure bar. There's my confirmation bar. As soon as it closes, I'm in that trade here. Excuse me. It goes up, makes a new high. Next bar comes down and matches support. Don't like that. Now, the match support, because we're up here at the top, I'm just going to manually manage this trade to try to get out of it someplace. The match I could have gotten out down here. I'm going to wait. Then I get this is a black bar. A black bar is where you have a a labeled oscillation at the top of the bar and a labeled oscillation at the bottom of the bar. It's just as freaky as the red bars. So when I got the black bar, as soon as it closes on the confirmation, I exit out of my position, lost a quarter of a point. You could have lost a little more. You could have made a little bit. Again, this is where reading the chart gives you the ability to manage that trade. Background color changes again. Great. So now we're looking for shorting opportunities. There's my failure. There's my confirmation bar. There's my entry. Well, as soon as the entry bar closes red, I'm freaking out, but it closed at the lower of the bar. So I'm going to just manage it. I'm going to take it, a step at a time, and we're just going to kind of play it by ear. It's 2 o'clock in the afternoon, and the market usually starts moving to 2:30. So price drops, starts to pull back up. Remember, my stop is off the price failure unless you're managing these trades. If you're managing them bar by bar, you're out here. You made a little bit, and then you can get back into the trade here. It goes up in matches. There's my match. There's my confirmation bar to re-enter back into the trade. There's my new low, but I'm still sticking with that trade. I get one red bar, okay, that's the middle of the bar. And you're either going to exit that bar, you get 2 red bars in a row, someplace in here, you're just going to go, holy shit, I'm going to get out of here. So at that point, you're out, 9.25 points. Okay, now it's 20 after 3. You're looking at this and you're going pretty close to calling it a day, but if the market keeps dropping a little bit, we'll see what happens. Well, there's my price failure, there's my confirmation bar, there's your entry. Now, your price failure or your exit here, your exit's coming off of that red bar. Now you have an entry as a red bar. I marked the trade. You could say yes or no. It's a 2.25 point trade. If you didn't take it, you're still 20 points for the day. I looked at this when price was dropping going into the close, and it was just like, I'll take the chance and manage it bar by bar. Now, managing it bar by bar, you would have gotten out down here, which is about 3:45. I did it based off of the move and the 2-bar close here for here. So, you should have been out about 78.75, but there's 8.25, so another 1.5. So I gave up another 1.5 to show you the 2-bar exit. Now, up here, okay, you didn't have anything up here until right here. Here you had a price failure and a confirmation bar. Well, your confirmation bar at this point took everything out, okay, except for the new low. You took out both of those, and you ready, you're 1 tick into it, and it's like, the only problem is it's 4 o'clock. Now the market's going to close in an hour, but you're in that trade. What are you going to do with it? If you're trading a single contract or a couple contracts, you're okay. And if you're in that trade there at 76.25 and you're down here managing it at bar by bar, I mean, you don't really have any place to get out of this until 4:30. And at that point, your options kind of dry up. So be real careful about these trades that are occurring 4 o'clock on. I try to cut them off at 4. There's Tuesday, 28.5 points. Let's go to Wednesday, 8:30. No sells. Okay. Here's, you have a failure and a confirmation bar, but this is failure toward failure. Remember where our targets are. Turns back long. There's your price failure confirmation. There's your buy, 2 green bars exit. No more buys in here. Changes color, looking for a sell. There's your price failure. There's your confirmation. There's your entry. There's your black bar. There's your exit. 0.75. No sell here because your confirmation bar has matched your price failure. Here's your price failure. There's your confirmation bar trading back toward a match. Now, in this point, it'd been just about a break-even trade or a loss of a quarter there. But again, anytime, your opportunities, your best opportunities are going to come toward those new highs and new lows. Momentum turns back up here. Okay, now I'm looking for a buying opportunity. Well, now it's 10:40 and it's on Wednesday. Well, what happens on Wednesday? You get crude reports, you get natural gas reports, you get reports that are coming out in the afternoon, or excuse me, after 9:30. It's called the after open window. So look what those two trades did. There was your price failure, confirmation, entry, 2-bar exit. Price failure, confirmation, 2-bar exit. You had just choppy consolidation telling you that, you know, price was just having a real hard time going up. Chewed that up. Once it rolled over, there's your price failure. Your confirmation bar not only validated the trade, but it changed the color of the background. There's your entry. That trade all the way down here, red bar exit. 17 changes back up here. There's my price failure. There's my confirmation. There's my entry. And here we get stopped out. Would have been a 2 green bar exit, but we got stopped out on the price failure, 4.25 point exit. Moving this over a little bit. Goes back up again. There's my failure. There's my confirmation. There's my entry. This time price chops. I get a price failure here, which, you know, confirms. So we're going to exit that position. Lost a point. Price rolls over here. Confirmation bar didn't come before we had the rollover. So yeah, we're going to wait for a selling opportunity. Price failure, confirmation bar, wrong color. Price failure, confirmation bar, correct color. And I missed that. Still a loss. There's my entry. 2 green, blue, green. There's my price failure of resistance. And there I get stopped out. So 2.5 points for that loss. Next down, there's your failure. There's your confirmation bar. There's your entry. And 2 blue bar exit here, 3.5 point. Final rolls over at the end of the day. Hold on. Going down, black bar, 2 price failures. We don't take the trades off there where it's failure toward a failure. Here we have failure, confirmation bar. There's my entry, 2 blue bar exit. Even with the 2, 3, 4, 5, 6 losers to 4 winners, we still ended up 9 points up for the day. That's for Wednesday. Now we're going into Thursday. 8:30 short trade. Price failure, confirmation, entry. Exit off of the failure of support. As soon as we get the failure of support, we exit. Color change. Price failure. As soon as the confirmation bar broke out of that failure to say, okay, now we are entering that trade. We now have to take out that new high. Second bar out does. And hold on. All right. Now, price failure, confirmation bar, entry, 2 green bar exit. Still looking for buys, failure, confirmation bar, entry. Aggressive because we're trading back toward the failure. So we've got to take it out. We have a failure, 50 cents. As soon as we get that failure, we're going to exit our position. We're not going to take the next trade because that's all part of that process. Now, there's a price failure, confirmation bar, entry, red bar exit, another point loss. We see a lot of consolidation, a little choppiness here in the morning coming out of this on Thursday. Next, looking for another buy. Failure, green bar, no confirmation. Price failure, confirmation, there's my entry, red bar exit. Momentum rolls over again, looking for confirmation. There's my price failure of resistance. There's my confirmation. There's my entry. And I get stopped out on the price failure here, made 50 cents. Now, price rolls over. I'm looking for confirmations of support. Now, here's a match support and a confirmation of that match trading back toward that new high. Okay, well, it's trading back toward the new high, which is acceptable. Yeah, I would prefer it was a failure or a price failure, but a match is acceptable. Well, outcome break even. Next trade, price failure, confirmation, entry. Soon as it matches, you know, considering I had the match down here, I'm going to take and exit my position. Or, excuse me, if you want to wait, you have your price failure, then you enter out of your trade there. As soon as you create that failure, then you have your match here, your confirmation bar re-entry here. Okay, you've already taken out all your tops. 2-bar green bar exit. Price failure, confirmation bar at this point. Now we're creating this new high. So I'm going to take that trade. I've got to take out the price failure. It does. I have to take out the new high up here, and it does. 3rd bar out. Continues on. As soon as I get a red bar, I'm out of the trade. 17.25 points. I need another entry. Need another buy because background color is white. There's my price failure. There's my confirmation. There's my entry. 2 green bar exit. 1/4 point. Looking for another buying opportunity again. Black bar, no entry. Price failure, confirmation bar, great. Entry, exit. Now, we see all the consolidation going on in here. Just be careful. I wouldn't have let it go on 2 bars. 1 bar would have been enough, and you're exited. There's your failure. There's your confirmation bar. There's your entry. There's your red bar. There's your exit. There's your price failure. There's your confirmation bar. There's your entry. There's your 2 green bar exit. At the end of the day here, you're up. Well, we made a couple changes, little small changes back there, but still you're up someplace in the neighborhood of about 40 points on Thursday. One losing day so far, guys, and that was Monday for 1/4 point. And then here was Friday. Friday, 8:30 in the morning. Background, looking for buying opportunities, price failure, confirmation bar, entry, 2 green bar exit. More buying opportunities, price failure, no confirmation. Failure, no confirmation. Price failure, confirmation because it matched the failure. Now, again, aggressive. If you're going to take the trade, that bar has to take out the failure. It does. And we need to keep going higher. We need to keep going higher. We want to take this out right here. It comes up red bar, it's showing you it doesn't have any steam. Exit your position. Next bar out, price failure, confirmation bar, entry, 2 green bar exit, lose 1/2 point. Price pulls back, doesn't give us another buying opportunity. Price pulls back. Now green, looking for selling opportunities. Got a price failure and a confirmation bar at this point. If you want to take that trade, you're about 1.5 loss here. I'm looking at this. The market's making higher lows and higher highs. I'm gonna wait until it progresses here a little bit. Price continues to go up. There's no buys in here. Sorry. Soon as it breaks the upside, I'm looking for a buy. There's my confirmation. There's my price failure. There's my confirmation. There's my entry. On the match, I'm going to take the exit, 1.5. Remember, I'm not taking the shorts in here. There wasn't anything valid in here anyway. Excuse me. Price moves back up here. Color change. There's your price failure, confirmation bar, entry, 2 green bar exit, a point. Failure, confirmation bar, entry. Price failure, stop, exit, 5.75 points. There's your failure. There's your confirmation bar. It's matched your failure. Okay. A little aggressive, but you got to take out those points. The next bar took out both. New high. Follow it up. 2 green bar exit, 6 points. Price failure, no confirmation. Match, no confirmation. Pull back. There's your failure. There's your confirmation. There's your entry. Red bar exit. And again, red bar exit because it's in the middle of the road. 2 points. Price failure, confirmation, entry, red bar exit, 3.25 points. And at that point, you're getting close to the end of the day. At that point, you're 1/4 You didn't really have anything. There was no more buying opportunity here. You had a price failure, and here you had your confirmation bar. If you're entered on that trade here, you had a little bit of loss going into the end of the day, a couple points maybe. So that's last week in a nutshell for PRICEPhysics. From now on, this is video blog vlog number 1. And from this point on, I'll do a wrap up at the end of the week, but I'll also try to do some live work, maybe like Tuesdays and Thursdays through the week. So, I hope it didn't bore you too much. I love this. And I love it because it's consistent. I love it because it's pure. I love it because it's, really just unadulterated, just pure price movement. Today we netted, or this week we netted between Monday through Friday. Monday we lost 4 points. Tuesday we had a little over 28. Wednesday 9. Thursday 40. Today 30. Round numbers. So 30, 60, in the neighborhood of about 100 points net for the week. If you're trading the micro at 100 points, $500 a contract. I mean, $500 for a $50 margin. Okay. You do whatever you want to do, but to me, it's just silly to, I watched a seminar the other day of this guy that's, wanted to sell you his masterclass system. My grandson was older than this kid, and he wanted to charge $5,000 for this class. My indicator is $1,000 a year, and we personally support it and give you all the tools that you can learn to read this yourself. Like I said, the GUI's purpose is to make your life easy. The common sense behind everything on the screen is stupidly simple. This is up to you guys. It doesn't have to be as hard as everybody out there makes it out to be. Hope you enjoyed the video. There will be more on the way, and you take care and have a wonderful weekend.